Well, India's cement industry boasts of a capacity of around 510 million tons, but functions at around 60 to around 65%. That's because of the low utilization levels in the south part of the country. Now, globally, China accounts for bulk of the production. Nearly around 60% of the global cement capacity is in China, but India lags its emerging market peers on a per capita consumption of cement. That could also mean potential for immense growth from here as well. Now, the key ingredients to make cement includes the likes of limestone, gypsum, slag, as well as fly ash. And types of cement, well, they vary based on the proportion of limestone that is used. For example, OPC uses a higher proportion of limestone, while the industry has slowly moved towards PPC, which requires lower limestone usage. Now, the sales mix in India is tilted towards the trade segment. That's more retail in nature and naturally more profitable. Now, the correlation between cement consumption and GDP is high. And as this demand graph is telling you, only thrice in the past 2 decades have we seen a negative number in terms of growth. And also, FY21 is likely to be the 4th such instance. Cement pricing is dynamic in nature, and it's a factor of demand as well as supply. But on the cost side, raw material cost, power and fuel cost, freight and forwarding costs, they are important components. And cement, being bulky in nature, is prone to moves in diesel as well as freight prices. Now, in the past decade, Ultratech has become the big daddy, shown big growth in the past decade. And the erstwhile ACC and Ambuja, they were the big boys. But now Ultratech alone is more than ACC and Ambuja put together. The two big companies in India that have shown phenomenal growth in the past decade or so has been Shree Cement as well as Dalmia Cement. Now, valuation-wise, companies which are larger in size, they have shown good growth potential and they boast of better profitability. They get a higher multiple, and that's what puts Shree Cement in pole position, going by its performance in the past decade. But what has changed in the last 1 month? Why are we all so excited about the cement industry? Because we saw degrowth for 2 quarters, and the street was bracing itself for very, very tepid volumes in the second quarter of this fiscal. But it appears that growth has picked up and the growth story has come back faster than expected. And that's why if you just look at the 50% of the cement companies that have already delivered numbers, ACC, Ambuja, Ultratech Cement, they've already shown volume growth, which is being read very, very positively. The street is now bracing for a strong rebound in the second half of this year. Though there is a fear that high petcoke prices would spoil the party, but operating leverage and a switch to thermal coal will hopefully keep petcoke prices in check.